Hey everyone, it's Monday morning, December 9th, and welcome back to Capital Markets Quickie. I'm your host, Endrit Çela. Since it's Monday, that means it's time to dive into the big market movers for the week ahead. We've got U.S. inflation data coming up, the ECB's final policy meeting of the year, and Bitcoin smashing past $100,000. Lots to cover, so let's get started. Before we begin, a quick note. Today's episode is sponsored by AMF Capital Asset Management Frankfurt. For tailored investment solutions and top-quality mutual funds, visit amf-capital.de. First up, inflation. On Wednesday, we'll get the U.S. Consumer Price Index data for November, giving the Fed one last look at inflation pressures before their big December meeting. The Fed has already cut rates by 75 basis points since September, and the markets are expecting another 25 basis point cut next week. Friday's stronger-than-expected jobs report added to those expectations. But here's the catch. If inflation data shows that price pressures aren't easing, the Fed might need to rethink its approach. There's also talk of tariffs driving inflation higher, thanks to President-elect Trump's plans to raise import duties. That adds another layer of uncertainty heading into 2024. Let's move to stocks. The S&P 500 and Nasdaq hit record highs last Friday, buoyed by expectations for more rate cuts and solid economic growth. Historically, this combo has been great for equities. But here's the test: Wednesday's inflation report. If the data comes in hotter than expected, the Fed might dial back expectations for future cuts, which could take some steam out of the rally. And looking ahead, analysts are already predicting a slower pace of cuts next year as the Fed weighs Trump's fiscal policies. Across the Atlantic, the European Central Bank meets on Thursday. A 25 basis point rate cut is widely expected. It would be their fourth this year. Inflation in the Eurozone ticked up in November, but still seems on track for the ECB's 2% target. Meanwhile, updated growth and inflation forecasts are expected to show a weaker outlook for next year, especially with new tariff risks, political turmoil in France and Germany, and slowing business activity. Christine Lagarde, ECB president, has warned that a trade war would hurt everyone, not just the countries targeted by U.S. tariffs. Now let's talk about Bitcoin. It broke through $100,000 for the first time last week. The surge came after Trump announced some crypto-friendly appointments, including Paul Atkins as SEC head and David Sachs as the new White House AI and crypto czar. While this is fueling optimism for more lenient regulations, there's still a big question mark over how crypto tokens will be classified, as securities, commodities, or something else entirely. That decision will shape the industry's regulatory future. And yes, people are already throwing around numbers like $200,000 by 2025. But remember, Bitcoin has a history of wild rallies and equally dramatic crashes. So, buckle up. Finally, let's wrap up with oil. Prices dropped more than 1% on Friday and logged weekly losses despite OPEC Plus delaying output increases and extending production cuts through 2026. The issue? Demand is still looking weak, especially in China, the world's second-largest oil consumer. Even with geopolitical tensions in the Middle East adding a risk premium, concerns about global growth and China's sluggish recovery are keeping prices range-bound. And that's your quick look at the week ahead. From U.S. inflation and Bitcoin's record run to the ECB's big meeting and oil market dynamics, there's plenty to watch. Thanks for tuning in to Capital Markets Quickie. I'm Endrit Çela, and I'll catch you tomorrow morning bright and early with the latest in capital markets news. Have a great day, everyone.